Welcome back to the Video CPA. Very good to be with you today. Today we're going to talk about tax aspects of an LLC. We talked about partnerships last time, and we've already talked about S-corps and sole proprietorship, so we're going to talk about LLCs today. And an LLC is a little bit different animal, so let's get into it. First of all, we've got our disclaimers that you should be used to seeing, our affiliate marketing disclaimer, our education disclaimer. And so let's look at what an LLC is. And an LLC is basically created at the state level. It is not an entity that is recognized by the IRS for taxing purposes. So what that means is that you have a particular tax return for a corporation, you have a particular tax return for sole proprietorship, which is a Schedule C, and you have a particular tax return for a partnership. An LLC does not have its own tax return per se. Okay, it's what's called a disregarded entity by the IRS, and so an LLC can be treated as a sole proprietorship, a partnership, a S corporation, or a C corporation. So with an LLC, you've got quite a few elections that you could make to determine how you're treated for tax purposes. Okay, so the biggest thing about the LLC is it offers limited liability instead of unlimited liability for its members. In an LLC, they're actually referred to as members instead of partners, okay, or owners or whatever, but we call them members. So let's look at some of the characteristics. You can have one member, a single member LLC, or you can have multiple member LLCs, okay. There's no limit on the number of members that you can have, so they're quite flexible that way, all right. And I mentioned just a few minutes ago that the LLC members have limited liability, so they're not responsible for, well, they are responsible for the LLC debts, but they're not responsible for, the debtors cannot come after them personally. Okay, that's what it means. And so in a partnership, for example, partnership might have debts, and the partners have to pay those debts, but they don't have to pay them out of their own personal income and their own personal assets. Let me rephrase that, all right? In a partnership, they would. I mean, in a partnership, there's unlimited liability, so they could go after the partners' personal assets to pay off the debts of the partnership. With an LLC, that's not the case, okay? They have limited liability for the LLC debts. They can't come after them personally. Okay. Single-member LLCs are usually taxed as sole proprietorships. They can be taxed differently, but they're usually taxed as a sole proprietorship, all right? Multiple-member LLCs are default taxed as a partnership. So if you want a LLC taxed as something else, you have to make an election to the IRS to have it taxed as say an S corporation or a C corporation. Now I can tell you this, in my 46 plus years of practice, I've never seen an LLC elect to be treated as a C corporation. I'm sure it happens. I've worked with small business, and I just haven't seen it, but I have seen a lot of LLCs treated as an S corporation. In fact, that's the way that I have chosen to do business when I've had an LLC, and I'll continue to choose to do business that way if I have an LLC that is making quite a bit of money or making money at all. So. Good route to go. An LLC that's taxed as an S corporation, I think, is probably, in my opinion, for a small business that's making some money and stuff, the best option that you might have as a type of entity for taxation. All right, let's look at some of the disadvantages. Well, if we're talking about advantages first. So limited liability is the big one. That's the gorilla in the closet. And most of these also are, when we talked about partnerships last year, these are advantages of LLCs as well. And when I say that, it's an advantage of a multi-member LLC. If you've got a sole proprietor and he's got an LLC, well, he doesn't have these advantages because they're just one person. But usually there'll be two or more people in an LLC. So, somebody may bring some cash into the business. You have two or more people with knowledge. You share the business expenses. And it enables a business to pursue more opportunities, that type of thing, better work-life balance, and certainly flexibility in the way that you're taxed. So the LLC, with its limited liability, is a very good way to do business. I will say this, if you, the only advantage of a sole member LLC that's filing a Schedule C as a sole proprietor is the limited liability. They don't have a lot of other advantages other than that, but multi-member LLCs, there are more advantages. So good way to do business. All right. Disadvantages. It depends on how you determine that you're going to be taxed. If you are a sole proprietor, for example, and you choose to be an LLC as a sole proprietor, you're still going to be subject to self-employment tax. If you are a multi-member LLC and you do not elect to be a S corporation or a C corporation, you're going to pay self-employment tax still. So it's important to realize that. S corporations do not pay self-employment tax. S corporations, the owners are employees of the business, so in effect they pay FICA, which is equal to self-employment tax, except the business can pay part of that. So half of that, just like you are when you work for Exxon or something. Exxon will take out 7.5% basically of your income, and then they'll match it and pay it in. And your LLC, if it's an S corporation or a C corporation, has to do the same thing. But partnerships, like I say, and sole proprietorships taxed, LLCs taxed in that way have to pay self-employment tax. Now, there is an advantage to that. It's not as administratively burdensome, because if you've got a S corporation or a C corporation, you've got a tax return to file, and you may also you've got payroll taxes because you're paying the owners. Even if you don't have any other employees, you've got payroll taxes to pay on the owners. And so administratively, choosing an LLC with a corporation is a little bit more administratively burdensome if you have additional employees. Or, well, if you don't have employees, okay, because the owners are considered to be employees. In a partnership, the owners are considered to be, they take self-employment tax, and you don't have to file payroll tax unless you've got other employees that aren't owners of the business. And that's the same with a sole proprietorship. So that's the only downside, I think, of having an LLC taxed as a corporation. In either type of corporation, so an S corporation or a C. All right, pretty straightforward. It's I like the LLC. I like it when it's an S corp for a small business. Works well. The S corp tax return is one of the more difficult tax returns to file, so you can plan on. I wouldn't do it. I wouldn't do it myself if you're not experienced in taxation. So you can plan on hiring a CPA or an enrolled agent or a good tax return preparer, and they're going to charge you for it. But in the long run, it's a better way to do business than some of the other entities. Thanks for watching. We'll be back in a week or so with a new video. And again, I appreciate you watching.